Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 15th of July, 2011. We're going to look at some different charts tonight. Instead of pulling up the free stock charts, we're going to pull up some charts tonight that already have basically three moving averages and some trend lines. We've got the 50-day, the 200-day, and the 20-day. We also have areas of resistance and support. So today, we close back above the 50-day moving average on the SPY. That is a good sign. So we continue to remain above, obviously, the 200-day here, the 20-day, the 30-day, the 50-day. What we are hoping for is a 1, 2, 3, 4 wave fade, fifth wave up in this pattern here. But until we basically get above 135, this line here, the overall trend remains suspect. It is long, but if I was putting new money to work in the SPY or the S&P 500, I would wait till we got a close above 135. One of our lines in the sand, once we get below the 20-day moving average, would certainly be 130 or 1300 on the cash. We really want to stay above 1300, 1294 on the S&P cash, basically looking at 130 on the SPY. As of the close today on the 15th, the overall trend is still long, all right? You can see obviously since beginning of February, we've been in a trading range with a lot of false breakouts and a lot of false breakdowns. We have held this low that we put in during the Japan lows. I do believe, like I said before, that sometime during 2011 we will take that out or retest it again. Will it be on this trip? We don't know. Maybe we go through 135 up through 140 first. All right. Let's also take a look at GLD. We do have this in some of the selected managed accounts. When I look at this, obviously once we got above the 150 area, and certainly through this area here, which is basically 151 as we mentioned on the blog, that was a breakout. It becomes self-fulfilling. And then what I start to do is, where would I hedge? I do think we're going to come back down and test this 151 area. Always come back down for the most part at one point in time and test the most recent breakout area. But I also look at some of these box moves here. We've basically got 1, 2, 3 boxes up, 3.5 boxes up. We could go higher here if we were to gap up sometime next week. I would start to hedge part of the position with the DZZ, which is the double short gold, just to kind of stop the bleeding in the event that we come back down 3% or so. Okay. Let's also take a look at some of the bonds. Let's take a look at the ETF TLT longer term. I do like this if we get above this area of resistance here. Volume dropped off over the last couple days on this little pullback. We could be looking at kind of a cup working on a handle. Again, a breakout above this area to me would be highly probable. And then we would probably place our stop either under this upward sloping trend line or possibly under the low that we put in here. A little bit of concern would be this gap that we put in last week. All right. We can also take a look at the AGG ETF. This is a position that I will disclose to you that we do have in the managed accounts, percentage-wise, with a pretty tight stop. We'd probably have our mental stop starting next week right under this candle here. We can also take a look at the financials, which have really failed. Been in this downward sloping channel for quite some time. When we look at the XLF, quite possibly we will double bottom here. I know we've got B of A out next week, so we'll see what happens there. That stock is failing. I would stay away from stocks that are breaking down. If you're trying to catch a bottom, like we said yesterday in the still chart, make sure you have a stop in place. Here's your B of A chart. This is why we don't buy and hold. We look at the stocks technically. All right. And then let's finish off with the only short position that we have right now. Even though the overall trend is long as of the close on the 15th of July 2011. We did put a short hedge in last Friday, which would be right around here off this double bottom, and we have since moved the stop up right around where this arrow is pointing, which is the open yesterday. So unless this gaps down, if the market continues to break out, we will exit this with a small profit. All right. If the SPY S&P continues to break down, we will cut it loose kind of in this 130 area and let the short hedge run. Again, for new money, we'd want to see a close above 135. If we get a close above 135, if we don't have any cash to put to work, we'll probably increase our posture in terms of leverage. Okay. All right, you guys, that's it. Doug McKay. As of the close on the 15th of July, the overall trend in equities is long. A lot of earnings next week. B of A, IBM, Caterpillar, Pepsi, Coke, McDonald's, Apple. We'll see how the market reacts to the news. Thanks for listening to the show, the blog. We'll see you next week.